We asked all of our staff recently, had all the managers in, to associate with the brand that they liked a lot. And of course the brands that were very popular were Apple, Google, Facebook. So instantly people saying digital is what we'd like to associate with their great brands. Standard Life hasn't been that. The industry hasn't been that. So when we look at ourselves, we have to look outside the industry to who are the people who are doing this better, who do we want to associate ourselves with, and who do we want to link with. So I think the banks have been much faster, insurance companies much, much slower. We, like many insurers, have been, I think, a little bit behind the curve. We haven't invested heavily. We've been largely a paper-based industry. But increasingly, we're finding that we and our customers converse a lot better online. But the main thing that we see is that rather than telling customers once a year with a paper statement, they can check their investment, their savings, every hour, every day, every week, when they want to. So we've invested an awful lot of money and time and effort creating something called customer service online. And what that lets us do is get messages to customers quickly and lets customers come to us when they want to, where they want to. And we get an awful lot more interaction. So the amount of paper we used to get per transaction is down by about 40 or 50%. And what we're seeing is customers all the time emailing us, going online, because that's how it is now. And the days of being an old-fashioned insurer doing everything by post has gone. Customers want to be self-service. Within our workplace package, around 90% of interactions are now entirely online. Customers can speak to us if they want to, but frankly, they don't want to. And we're not there to sell them things, we're there to let them come to us when they want some help, when they want some assistance. And that's our future, and that's our investment, and that's our approach all the way through. Our investment for the last 4 or 5 years has all been about this moment. About 2014 is the time when Standard Life, for the first time, will be on a level playing field because the government's banned commission. Every rebate we give back to customers, but there's no way of explaining that very easily. So the transparency that's coming through on bundling means that customers will see exactly what they're getting and what they're paying for. Because a lot of our competitors just now, they're paying fees, but it is invisible. You don't know that you're paying a fee. And what we've developed is incredibly simple. You know, we guarantee when we get a rebate, it goes to you. We don't keep any slices of that. Only by doing that digitally and allowing customers to compare can they see leading online sites, without naming names. You know, they are keeping a charge. They're making money by taking rebates and keeping them and not passing them on to the customer. We don't do that. So we know that we're cheaper than a lot of our peer group and we provide great service, but it's not clear, it's not transparent. And only through digital can you get that message out and quickly, because I can go on that site and very easily see Standard Life actually has better service and it's cheaper. As CFO, it's making sure that innovation is the right innovation. Technology appears to be a very fashionable, faddy kind of industry. There's always a new gadget, a new bit of software that they love. And it's making sure that our investments are long-term investments. I don't mean 20 years, I mean things that will still be usable in 2 or 3 years. And it's ensuring that we don't have a single blockbuster, we have a portfolio approach. The role that an FD CFO has to bring just now is not, I'd like a 25-page, 2,000-sheet Excel model to say, this is the way forward. Because the investments that we're making in digital are not those that you can easily measure with financially. What we're investing for is to get more customer contact, and it's non-financial indicators that you know by those moving that you're winning. If you're just waiting for cash flows, you won't be able to measure them. So what we're looking for is have investment in things that customers use and make a difference. And if they're not doing it, move off quickly to something else. Don't make a big bet that takes 2 or 3 years. Make a lot of small bets. And then the ones that are working, put more money behind. Historically, CFOs have been seen very much as the no people, the ones that say, very creative, but frankly, I'm not interested. And that's really tempting, because it flies in the face of years of training to say, is there a hard quant behind this that says it's going to work? And it's very compelling. Creative stuff is very sexy. The whole organisation wants to get behind something that looks very sexy. But the CFO role is to make it just pragmatic and realistic and unemotional. It might be a great idea now, talk to me slowly about it, take the excitement out of the conversation, and let's have a commercial reality. It's a good idea because why? Why will this make a difference to the customer? Why will it make a difference to the company? If you can get through those two barriers, then you're halfway through to getting a business case that will work.